higher for longer rates, is that space set up for more pain ahead? Let's ask FirstMark's Capital's Rick Heitzmann. He's with me here at Post 9. It's good to see you again.
Hey, great.
I mean, I'm imagining a scenario in which, you know, you see this pushed off rate cut environment and say higher for longer, and you're like, oh, just as we thought things were trying to get back to normal, now are we pushing things off again?
Just as we thought it was safe to get back in the water.
Yeah.
So, you know, we thought it was going to be, you know, we'd be starting to get into the cuts. Although there's two things we really look for. You know, rates coming down helps tech because they're long-dated assets and obviously helps VC. But the other thing is at least there's a little bit more certainty. The volatility of rates compounded that, and that was a big issue. So at least if we're able to say, hey, it's going to be higher for longer, we anticipate that happening over the course of 24, at least there's rules of the road and people have begun to invest.
What about the return of volatility, not just relative to interest rates, but markets in general, as we're hoping that they're going to open up again? And you're going to be here talking about the latest and greatest IPO, and maybe one that you've been an early investor in. Are you pushing your expectations back there, too?
We're not. Hopefully we'll be here. Hopefully I'll be here talking about that company that's being here at the New York Stock Exchange. We're preparing our companies to go. And even if rates are higher for longer, we think certain of these companies are riding big enough megatrends and have results that bear out being a public company regardless of economic environment.
So you think at what point this year are we going to start seeing more IPOs?
I think you'll see some soon. I think you're going to see maybe Harry's.com, a StubHub, a SeatGeek go out in the second quarter. I think this window before the election, you're going to see more IPOs than you have in the last couple of years.
Are they, you know, I look at a Reddit and I'm like, okay, well, this is like an idiosyncratic story. And maybe some of the ones you just mentioned are too. But what's the signal that the capital markets are truly open for business again?
I think you are going to see the more idiosyncratic stories. You're going to see the sub-$10 billion market cap companies go. You're not going to see, I don't think, in the near term, a Databricks, a Stripe, which is the big IPO, which really opens the market.
What forces them to go public? I mean, what do they need to see before they feel comfortable and secure in this market?
They're going to need to do a big $1 billion type IPO, which means there's going to have to be a lot of dollars that are currently on the sidelines off the sidelines. So they're going to want to see a healthy market, and they're not going to be forced to go. They have plenty of capital. The private markets are open for them, whether they want to do share buybacks from their employees or whether they need to raise primary capital or acquisition financing. So they're not in a rush, and that's the other side of the coin of they're not in a rush. The markets aren't ready, and it'll probably take till post-election time frame for that to happen.
Where are we in terms of, you know, non-AI, non-GLP-1? So
Yes.
I've thrown another variable in.
Yes.
So you can't pick that either.
Yes.
If I took those two out, what's the trend that's the next bet that I need to think about now?
That's what's pretty hard, because I think those are the two mega trends that we're seeing play out across the ecosystem. Still, you're still seeing, you know, the highest valuations in the public and private markets being somehow correlated to AI. And sometimes they're chips, and sometimes they're hardware like Astera. Sometimes they're application level, like, you know, a Databricks or even a Data IQ in our portfolio. But then the next trend is probably GLP-1s and healthcare, and you're seeing the manufacturers, distributors, all those companies performing incredibly well due to fundamental demand. Beyond that, I think there'll be somewhat of a return of enterprise.
Well, you were early, maybe the earliest money in Row, right?
Yes. And they're seeing fundamental demand for Row Body and Row.co's kind of body and healthcare products that, you know, as Ozempic and Wegovy are now becoming mainstream, and you're seeing a lot more use cases for health that are really going to change the environment.